Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Actually, you were a little robotic there for a second, but I tried again.
Check, check. Can you hear me now?
Yeah, perfectly.
All right, awesome. Awesome, awesome. Microphone check. Looks like we sound good. Let's get a confirmation from the chat. His Royal saying we sound good. We appreciate it. Loud and
All right.
clear. Thank you, everyone, for joining, and welcome to At the Buzzer, our market recap. If this is your first time here, I'm Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay, been a Top Step performance coach since June of 2023, been trading for the past 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since May of 2024. Um, no, 23. I'm getting older. And been involved in the futures industry for 4 decades. I'm here to share some experiences, perhaps some knowledge, and maybe help you become a better trader.
Awesome. Thank you for that, Coach. And thank you all for joining us today. Let us know in the chat how you did today. I already see some people saying they had pretty good days. Shout out to you, Scott Vaughn. But let us know how you did today. Were you up on the day, down on the day? Anything that you learned from the day? Did you stay out of the CPI print and trade after it, like we talked about yesterday? Or did you trade before it and you were like, I think it was Fernando, who we heard was a live account trader, up about 50 grand today. I don't know any other way that you're up 50 grand, but besides holding a trade into CPI, which from a technical perspective may not have been the worst trade idea. How did I do today? I had a losing day today. Took a short in the S&Ps last night that got stopped out. And then on Topstep TV today, took a short in crude oil that was in the profit, held it for a longer profit target, identified a level that I probably should have gotten out of the trade. It hit that level to the tick and bounced $2. So sometimes you got to take what the market gives you. We say that all the time here, but no matter who you are, no matter how long you've been in this game, you have to execute based on what the game says, right? And in my case, could have taken some profits on that crude trade, turned it into a loser. But that is the game that we play. The green that you're seeing here, this is actually an account that I'm testing some stuff with Topstep. So this is green, but my XFA is in the red. We had some news out today, Coach.
What was that, Coach? We've been waiting for this for what since the last CPI.
Since the last CPI, 2.9% was the forecasted number. What came in was 2.9%, in line with expectations, so nothing bad about that. And then the core CPI year over year forecast was 3.3%, came in at 3.2%, so a little bit better than expectations. We saw a pretty strong market reaction to that print. The buy programs look like they're back on. We also had some bank earnings come out, a bunch of Fed speakers, crude oil inventories. Busy day on the calendar, and an interesting trading day. Interesting trading day. I will say that I was on fast markets. The morning trade after the markets are up, a point and a half, a percentage and a half, can be difficult to trade. So we'll talk about that a little bit. But let's get into the charts. Unless there's anything else you have on the news, Coach.
No, let's just get into the charts and get into the thick of it.
Let's do it. I'm going to switch over to the quote board. And part of the reason I'm using this other account is because for whatever reason, my layout won't save on the other one. So maybe I'll ask Coach Robert about that tomorrow. But there are 35 different markets that we can trade with Topstep accounts, not just the equity markets. And uh, today to the downside, we had soybeans down 0.45%. Lean hogs down 0.69%, and soybean meal, our biggest percentage mover to the downside, at 1.14%. To the upside, we had nat gas up 4.06%. Heating oil uh, up 4.12%, and silver, our biggest percentage mover to the upside, at 4.2%. To talk about our big four, we have gold up 1.45%, the S&Ps up 1.79%, the Nasdaq up 2.2%, and crude oil, our biggest percentage mover to the upside in our big four, um, number four on the day out of all 35 markets, 3.83%, trading above that level that shall not be named. Crude oil is in rollover as well, but we talked about that consolidation we were in for 6 months, and the fact that the move out of that consolidation was going to be pretty big. Uh, we're seeing that, right? It's happening now. Uh, that might be a good reason to ask why I got short. Looked like a decent opportunity
Yes.
for a short trade, but it yeah, crude oil is on the move again. Uh,
Yeah, a big move and outperforming natural gas. Well, we expect that, and natural gas is only up 4%. It's a dead day, but
yeah,
crude up almost $3. Um, so, but the star of the show for most of our viewers was the Nasdaq and the S&P.
100%. So I have an S&P chart up here. On a 30-minute, coach, I'm going to disappear for just a second because my dog is barking at something. Just
Oh,
want to make sure everything is still in the house. So I'll be right back. I'm going to leave you here with a 30
all
second
right. Good
chart. I'll
luck
be
with
back in
that,
30 seconds.
Coach.
All right, I'll be right back.
All right. All right. Well, Coach Jay defends the castle. Um, let's see. Technically, that white line being the 200 bar moving average, found it very interesting that it closed above that for the first time. I don't have control of the chart here for at least a week, and that did it about an hour before the number came out. Um, I sadly waited for the number to come out. I didn't want to take the volatility and missed that big fat spike. Um, but going forward, being this was pent up. We talked about yesterday that kind of choppy action after a big break is a first sign that the sellers have lost control. And boy, did we see it. That half hour bar doesn't do justice to the move, in my opinion. Coach Jay, you went down to the 15-second yesterday. Let's see what that looks like here.
Let's take a look. I was watching the charts at this time, and on a couple of different platforms, the move was so drastic that the charts kind of just froze for a second and was just like, wait, hold on. What'd you say? Uh, Here's a 15-second chart. That is a 50-point candle, 45-point candle on a 15-second chart in the S&Ps. Uh, if you're on the wrong side of that,
Well, it's a very good point. Some people made some big money getting
y-
long before that, but we're not hearing from the people who are no longer around.
correct.
It's like soldiers who died in the war. They can't tell you that was it worth it. We
Right.
don't know because they're not here. So um, look at that, 50 points in 15 seconds.
Yep.
Well, that's where we're at. Um, but it doesn't surprise me. I just went through the 30-minute and we closed above an hour and a half before we closed above the 200. Um, so this was pent up buying. We had discussed that this kind of reminds me of last year around this time.
Yes, it did.
We broke first and then never stopped rallying after that. Um, so that think about how much was bought, and I would be interesting in monetary terms. How much was that allocation in 15 seconds? Someone was ready to buy it.
Right. Right.
That's an entity. There isn't a bunch of one lot traders.
Coach, I got a question here. So, and we talk about it all the time, right? Not trading into the news and things like that. In this case, and obviously this is hindsight, this is one that would have worked out. Uh, from a technical perspective, right? How do you manage this, right? Because you have what is a buy signal prior to the news coming out.
Let's
Um,
go back. Yeah, go back to where you were, because this is my pain today.
right,
I feel like I lost thousands of dollars.
right.
I saw that and I said, "Well, I'll wait for the news." And I usually, in my back testing, for me,
Hmm.
there was no news. I'm just studying the flow.
Right,
And this you can call this hindsight, but I'm evaluating how I can get better.
right,
Now, with that said, my in that two ATRs is my risk at that point. Two ATR stop, I don't get stopped out. Sounds easy, but
right.
now you have to look at what how much is two ATRs on and this is a half an hour.
Hmm.
So what was the ATR at that point? I think it was this
Right
is like an
around
$800
6 points.
risk.
Right around 6 points before the
6 points, 12. Yeah, just 600, $700 risk.
right.
I didn't want to take that risk.
Makes sense.
Um, but looking at the flow and in hindsight, could I have done half this size.
Yeah, yeah. And that's the thing, right? And
Yeah, I
that's
could
the
have.
interesting part of trading, right? For every loser, there is a winner, right? So there's a winning trade on the opposite side of this. The problem is it's usually a pretty risky trade, but sometimes you have to put on that risk, right? And it's like you said, am I comfortable with it initially? Because the one thing I do know is that in a trade like this, right, where we see of especially in a live account with live fills in a 15-second 45-point candle, that 12 ATR stop might be, or that 2 ATR stop might be a 4 ATR stop before you get a fill. Um,
That's
but it
happened too.
right,
Um,
but it's technically a great trade. And if we put the whole puzzle together, right, we've had 6 down days on the Nasdaq in a row. That doesn't happen often. 6 down days right before a big number where as the market's dropping, buyers are able to accumulate a position. And then right before it, you see the market getting above a technical level. That puzzle itself says potential room to the upside. The only part that's the issue there is just that if you're wrong with that puzzle, the risk may be more than what you're willing to pay.
so then it becomes position sizing. So
Got you.
right, and when I talked a little bit about this today on our VIP with George.
Right.
Really it comes down to position sizing is risk management. In retrospect, next time I see that,
Hmm.
mm, at least three micros,
Right.
because then I'm comfortable with the risk. We talk about those principles of consistent winners. Accept the risk, be comfortable with it. So yeah, wow.
Right.
Now now let's just talk about our. You waited, and then this is it. You waited for it, and now what do you do?
Yep. So I'm going to go down to a 3-minute chart because I did wait. I was on fast markets this morning, and we waited and we talked about framing out this candle and seeing how it presents opportunities and what we can do with the opportunities that it presents. Now, a couple things I want to point out here. We have this CPI candle. You guys know we use VWAP for pretty much everything. You see the angle of this VWAP where it didn't leave immediately, but coach, this was just waiting to break out of this zone on the, second or third 3-minute candle that we had. Uh, the difference being yesterday, where we had the PPI print and that angle of VWAP. being much flatter, right? I talked yesterday about taking this short trade because of this angle of VWAP, where I have a range defined. I'm able to take a short and risk making a new high because there is no follow through volume on that initial move. Today was a lot different, right? Today that VWAP was a pretty steep angle, which should say, hey, don't fade this, because uh, you know at least initially, there were some buyers that followed through on that move. We open up. Here's the New York session open here, and uh, if we and we talked a little bit about this yesterday. Do we look at the opening range that we default to every day as the open for the market when we have market changing news? What's technically the open? Is it the CPI print or is it the New York session, which is always going to trade more volume? But really, the day started with that CPI print.
Let's just look at that volume on that 3 minute.
Mhm.
Just what was the total volume on the
Uh, uh,
3 minute from the number?
27,000.
So 27,000 total volume. So half of those are buyers, or half of those are sellers. So let's assume that's 13,000 buyers.
Yep.
Just
With thin books.
how with thin books. Well, let's look what VWAP held, broke out, and what happened to that range. It acted as support. This is very bullish action. So,
Yep.
we waited, and we were conservative, waited, and you're right. We had some good information.
Yeah.
And those
100%.
and those buyers felt no heat. Of course, they got those in 10 seconds,
Right.
maybe even less. But that's that's the level from here on out.
Yes, it is.
It'll be very interesting.
59.56, the high of that 3-minute candle on the S&Ps, that 55 area. We can see it, right? We look at the high of that candle. How many times did we come back and test it? With view up above. Again, I'm looking at this as the start of the day because that's the market changing number. Um, and VWAP is above it, right? So anytime we get a pullback below it, should be an opportunity to buy. I'll be the first to say that I missed an opportunity to buy this on fast markets this morning. Called out the level, mentioned to Hoag, hey, that's the high of that candle. VWAP's above it, should be a good buy. Um, Great trades don't give you very long to get in. Um, don't give you very much
No, they
opportunity.
don't.
Take the trade, right? Shoot the ball. And a pretty much no heat 30-point move in the opposite direction. And from the time we had when the New York session started, it wasn't the easiest trade, right? I was on with Jerome. He was talking about taking along as well, but we had Fed speakers coming out and things like that. This isn't the most decisive move to the upside. Uh, but any pullback today really was an opportunity to buy based on CPI. Again, no bad data. Dolby says it all the time. I don't want to short the equities unless there's bad news. We got good news. Uh, so on a day like today, looking to the long side in these markets just felt like a much safer trade, even into the close, right? We didn't get, I think I said this on fast markets as well. The markets after this move are already up, a percentage and a half, almost 2%. We had the Nasdaq up 2.2% today. Once we start getting to that daily ATR range, my mind goes to, okay, how much realistically, unless we're going to see a day that we talk about 20 years from now, how much realistically is there left in that move, when most of it happens in 15 seconds, right? So but even with that being said, I think the buys were the right trade all the way into the close, right? They were buying in power hour and we're able to make, squeeze out some dollars on it.
Yeah.
Go ahead, coach.
Would you just describe it's like when you hit that ATR
Mhm.
range, it's like discussing buying a used car.
Right.
It's our the prime is already out of it, and taking risk at that time is like, well, it's a lot more random. Um,
Yes.
and let's look at that. Where is that? I have it here. For me, average true range resistance was at 21,300. Yeah.
21,300. Okay.
So let's look at, one of the things I look is, let's look at on that 3 minute, how far away we are from the average true range. I mean, from VWAP, from that candle, from the news candle. The first time we hit 21,300. The- I can't hear you, Coach.
Oh, you can hear
You're
me
on mute.
now.
Yeah.
21,300 is this yellow line here. We pretty much did that full daily ATR move in the CPI candle, and then it was a range day. It was a range day after that, right, where we saw the full range. Um, you know, we talk about looking at major levels 21,400. We didn't see a lot of convinced buying there. So was there an opportunity to short? Jerome actually was getting into a short here, which I did love that trade for this reason. We've already expended the daily ATR. What's the likelihood that we do one and a half that or two times that uh, today, right? Could it continue tomorrow? Absolutely, right? I think if we go out to a daily chart and we look at some of the moving averages that we talked about, oh wow, look at that! Isn't that funny? The 20 and the 50 moving averages starting to kind of cross over each other, and the high of the day was that cross. But once that daily ATR is spent, my mind goes to how much room is there left in this move. That doesn't mean I want to short it, but I'm thinking about if I do take a long, managing the trade as it presents itself, because we've kind of expended that
Wow,
move.
I didn't even. Let's go back to that 3 minutes and see where we are at that point. Are we two ATRs away from VWAP?
Up at this high here.
Yeah.
Let's see on the
Oh,
three
yeah.
minute.
No, on the first time we went there, when you said Jerome was looking.
We're
So I would,
we're
yeah,
three ATRs away.
three ATRs away. Yeah. How many times have we stayed three ATRs away without a correction? I don't know. I mean, I would say that's the point. If you're looking, okay, I want to fade this
Mhm.
on versus just the price, because that worked. There was some money the first time we went there. There was some heat. But now let's start talking about how when a market gets overstretched. So at two or three ATRs, where does it fail? So let's put a VWAP on that three ATRs and lean against that VWAP if you want to sell it.
It's a nice trade.
I mean, there was one time it closed above it. Okay, out, get back in, hold it until it closes in above, or get another ATR. Since I'm just measuring it against volume, and like you said, what are the chances of continuation at this point?
Right.
No,
In the day, right? Tomorrow it's a different story, but we day trade here. So it's an honest question, and that extension clearly gave us a nice short opportunity here. Jerome had the right idea, but I think he kind of felt it as well that a short was counter this, right? Counter what just happened here,
it's
where
hard.
you it's a hard trade to take. It's a hard trade to take. Sometimes the hard trades are the ones that pay us well, and eventually it did work out. But it's like, hey, where do I set my stop here, where I don't get ran over if
Bingo.
the buyers decide to come back in. Now you could go two ATRs, you could go above the new high. All of those in hindsight would have worked really well, but when you have to make that decision in real time, um, maybe you lean on some of those things, right? Where I make some of the decisions that I have to make in real time prior to. So then I just have to execute. But I get it. I get the hesitation. We got speakers. There's uncertainty. Um, and it's a lot more difficult to make that decision in real time, but that is what we get paid for.
Because
Um,
you have to have skin in the game. We haven't said
yeah,
that in a while. You have to put some skin in the game. Just looking at it and executing are two different things.
100%.
Someone asked, is the daily ATR based on the average range of the last few days? Yes, in this instance, it's the average range of the last 14 trading days.
Yep. We got some questions in the chat. Uh, do the market makers want it under 5,900 by Friday? How does their hedge work? Were they buying all day to cover their position, causing price to hit 6,000? Uh, if I knew some of the options data, that would be a good. That's a good Anne Marie or Nick Furtick question, and I think Nick Furtick is actually on Topstep TV tomorrow sometime. Maybe I'll send him a message and ask him where some of the options levels are. But that is an interesting question. And then Kurt asked a question: if you were short a big amount, then CME Exchange would prioritize small orders first, so the big fellows will always lose the most you can in these events. No, no, it's there's a queue, right? There's a queue of trades. It depends when the orders come in. Go ahead, coach. You're gonna say something there.
Mm, no, there's two levels. You either have access to the pipe, and then you get for all the geeks out there, it's pings, and the speed of the calculation of your computer. Now, market makers get, and I can make an argument why they get access to it because they have to take the five. Someone's coming in there ripping eyes out, buying thousands, and you're a market maker and you're on the other side. Well, if you're a market maker, you have to be able to take both sides. So they get first crack, and it's down to micro milliseconds. It's almost in the quantum world. So when we looked at that 15-second, there was how many thousands traded? It's like so those market makers, you want to take the other side, well then they have to stay alive. If there's no market makers, you're gonna have to pick each other's
There's no
pick,
market.
pick each other up. There's no liquidity. So there are different levels, and I don't want it's in the discussion. There's a reason for it. But overall, it comes down in the base. How fast is your computer? The computer is a calculator. It's
Yep.
based on how fast you're doing the calculations. So when you get, it, every ping is you're one step behind. Um, so for me, for an average trader, it goes from my computer to my server to the exchange to my brokerage house server to, to Globex. I'm I'm behind it. So trying to trade, like when we talk about it, that looks great. I just you had to take you wouldn't have bought anything but the high of that. It looks great.
Yeah.
But you mentioned it earlier, in reality, you put a market order in there, you got filled 50 higher, 40 higher.
Yep.
Um so I mean there's and in defense of market makers, you want to make the market where you can't take two sides. We won't
No.
have it
No.
liquidity.
No. We would not have a market.
Um, and that one is you're never going. Don't enter it. They spend, I don't know, tens of millions of dollars just on their. You're in the you're a
Oh
technician.
yeah. Yeah.
Oh, I mean, tens of millions of dollars just on their hardware. So,
There's a
uh,
pretty cool documentary on YouTube. I think it was Planet Finance, but they were talking about some of the server farms in Japan and the location of those for their traders. I'll try to find the link to it, but it was pretty cool to watch. But exactly what you're talking about, Coach. Right? Location, location, location. It matters in real estate. And depending on how much money you're trading, it matters in trading as well. Um, not something that I think most of us on this call probably worry about, but as far as prioritizing orders, it's who can get it the fastest, pretty much.
Yeah,
Um,
I didn't. Hey, there was a hedge fund that built a series of microwave towers from New York to Chicago.
hmm.
How much is that? Th-
How much money does
and
that make? It's an investment,
and that's a constant war because you're only as good as the next sharp engineer that comes out of MIT and goes, "Well, I can make this a billionth of a second faster." But that's not our game.
right? We are the fish. We are the fish.
So,
Anything else on the equities, coach, before we move on to let's go to crude oil and then to gold. Anything else you see on the equities?
no, I'm good.
All right. Let's go to crude oil. Breaking out of that range, trading above the number that shall not be named, $80 a barrel. We were in a about a 3 month consolidation in crude where this
We lost you again, Coach.
you should be able to hear me now. Uh,
Yeah.
we were in about a 90-day consolidation in a $6 range, and eventually broke out, trading above that $80 level. We had the trend line from the where's my trend line button? There it is. Trend line from the high of April. And once we broke out of that, it has just been nothing but buying in this market. See what happens around this $80. We know if we were watching crude all last year, $80 was a pretty nice resistance. Of course, this is going to be adjusted for the different futures contracts, but every time we saw crude near $80, we did get a nice sell off. But not a blind sell, not a blind sell just because we're up here, because this market is clearly in a trend. On the 30-minute chart, we're above the 200 moving average, uh, above the 20 and the 50 are trending still as well. We did have inventories out today, and that's part of the reason I took the short. Um, but let's look at a shorter time frame. I'll kind of explain the trade that I took, where I should have gotten out, and uh, let's see. It was a counter trend trade. I was aware that it was a counter trend trade. Maybe my eyes got a little bit too big, and was looking for more of a pullback than what we got. But we had a couple of things here. So I got short at I was short 79.85, 79.85 with the two lot. 79.85. Why does that seem off?
Is this the March or the Feb? Did you
Oh,
sell
I think it. I
March?
think it. I think it rolled over. I think it rolled over.
Yeah,
Yeah, you're right.
yeah, I got it's rollover. March should be front month tomorrow.
Okay, it did. So it did roll. Believe this was the candle I was looking at then. Yeah. Okay. So it was this candle here. Prices are going to be a little bit different for where I got in, but or was it 78? Okay, there it is. 78.85 is where I was short. Uh, got short here. We had inventories come out. This is the inventory print here. Inventory print here. Attached VWAP to it. We pushed up towards the high of that inventory print. We rejected. VWAP was flat. I want to take a short, right? So I'm in this trade to the short side. And then the one thing I called out was this was the highest volume candle that we had outside of that inventory print. I have a trade that is 40 ticks in the profit with a two lot. Uh, that's a pretty good trade for a day trade, especially because on this I wasn't risking much. Like I said, my eyes got a little bit too big, and I was looking for 78.20s to the downside. Um, but the market respects volume when it comes in, and we traded right to the low of that candle. And the one thing for me is it's important to, if you use certain things as signals, not to uh, ignore those signals when they're giving them to you. Right, this is a trade that I could have taken profit on. Shit, if I was looking to the long side. this was setting up a beautiful trade to the long side. Uh, and really, I think when we take our trades, we have to see, whether or not, again, where do our trades fit in the overall context of the market? Is my trade just a counter trend pullback before the eventual move? That's what that was. Uh, and if I take profits here, then we're talking about a different day in my accounts. But when you neglect the information that the market's giving you, then you get results that the market wants to provide, right? And how I can tell that this was such a great level, we came back and tested it. And once we tested the low of it, buyers are still there. We tested the high of it, buyers are still there. I got stopped out on this move here, but the way I'm looking at this loss is, hey, when big buying comes in an uptrending market, that level, whether you're taking a short into it or buying at it, that level is important to the market for a specific reason. Notice I didn't call out a price on where that was because it could be at any price. There was significant volume traded at that level, so it's important to pay attention to. And buying anywhere in this was a
Well,
go ahead, coach.
Coach, did you get I'm just trying to help. At one point you were short. Did you get an ATR?
Let's see. Let's see. So I was short from 85, 78, 85. Did I get one ATR? On the 3 minute, I got exactly two ATRs, coach.
Okay. Now, I'm just trying to go through it and help. If you want to take the other side, and you said it, counter trend, where the actually counter trend sells are where the buyer stopped. All right.
Right.
And it just kind of leaks back. I think if you do that again, I would look at the ATR is the average true range, Darwin's TV. That is the average range of the last 14 candles.
Yep.
So um, just counter trades. You got to get it because that's why I'm not good at it. That's why I take one side. I don't only looking to buy crude oil if I'm going to do this. Because I'm no good at counter trend trades. I don't know. It's not my cup of tea. Doesn't mean it can't be for you. But I would say next time, be aware of that.
Yeah.
Even one ATR, I'll just
Or like Dolby
take the money
says,
and run.
if you draw a line on your chart, use it. And that's what this was. I drew a line on my chart. Use it. Ibrahim says, "How did you see the ATR at that exact place? If you look at the ATR indicator that is above my head, right here,
Right
right
through
there,
your ears.
right through my ears, right above my head over there. If you hover over the candles, that ATR value is going to change. And for crude oil, it's showing ticks, right? So 15 ticks in a 3 minute, 14. You can see that value changing as I hover over different candles. And then what coach is talking about normally for a stop is taking that value and multiplying it by two, right? So if I got short here, my stop should have been two ATRs, which it was, right? My stop was at 79.20, 30 ticks, and I got a one-to-one trade. Uh, One-to-one trade in a counter trend, I got to take profits there, right? Got to take profits there. We got some questions in the chat. One from Faye Marie 504. Uh, Wondering if that is your area code. Love that city. Uh, Ever since I advanced from combine to XFA, my trades are off. I don't know if it's the huge range we're in or my psychology. Help. I'm going to ping you in Discord as well. Faye, good question. My question back to you is: Are there is there anything that changed in your uh, trading? Right? Are you taking the same exact trade setups that got you to pass the combine? This is always an interesting question anytime someone asks because there's a lot there, right? There's a lot to kind of uncover. If I'm talking to somebody who passed the combine in 2 days, trading max leverage, then it's a completely different conversation than talking to a person who took 3 months to pass that combine, right? So it kind of depends on how you passed. But I would say it definitely is your psychology, right? Maybe the thought of trading real money is kind of getting to you. If that's the case, and you have some anxiety and things like that. Okay, switch to micros in the XFA, pass combine in 3 days. I think it's and coach, you could, I want your input on this one too, but I think it's the psychology of trading real money.
Oh, definitely.
Yep.
Oh, hands down.
Mhm.
Read Skin in the Game, the book. It goes in there because by it's Taleb. Um,
Nassim Taleb.
and what it is,
Yep.
Nassim Taleb. You when you have skin in the game, your whole it all changes. Or if you don't have skin in the game, that's why I quit watching ESPN commentators. They're not in that moment. They're commenting about what was going on at that moment, but you're in the moment.
Yep.
Like why I drove me nuts. Why doesn't he just pass it down? He's wide open. You don't have a 350-pound animal chasing you that you can't see, perhaps. So why I bring that up is you're making decisions under pressure now. It's for
Yep.
reals. Right?
Mhm.
And the idea is in is to execute a trading plan. And you get to a point where you need to get to a point of what we just call it a 0 point. Your emotions are the same, whether it's live or it's Memorex. For us older viewers, it means something. It's money. So one of the things I would do is change the money to ticks. Think of poker players. They're trading chips. They're that might help that. Um, and part of the journey is to get to a point where that's why we talk about the mindset of you're executing a trading plan. You're not trading money. It's a big difference. And if you learn from that and you can do it, then you have a skill that you can continue, the continuation that, hey, but, you know, it's losses, wins. It's the same emotional output. I'm executing a plan. So learn from that. And when you do, like I said, possibly just get rid of the dollars and don't stare at them.
Yep.
Look at ticks.
Good point, coach. We got another question here. I'm not not sure who's going to answer this one. Maybe VWAP George in the chat, but from Claude, Coach George, do you take divergences into consideration in your trading setup? Um, Coach George, if you're out there, let us know how you look at divergences. But what about you, Coach Paul? Do you look at divergences in your trading?
No, I don't. It's not part of mine. But I understand. I've seen it. I've got it down to 4 steps.
Yep.
Um, that just didn't work for me. But if doesn't mean there's not credibility into it. But I don't. Do you?
I don't. I will look at you know, if I'm trading the S&Ps, I'll look at the Nasdaq to see how the Nasdaq responds to levels. But at the end of the day, I'm going to trade the market that I'm trading. Um, Divergences in volume, maybe, right? If the market's moving up on lower volume or decreasing volume, I'll look at that divergence, but not between markets. And shout out to Coach George for sure.
Claude, no problem. It's actually thank you. Obviously, you were watching today um, on Top Step, and it's a good question. And I'll just go in one more time into it. Use the tools that make sense to you. I mean, think about how many different. We don't even touch the surface of how many different technical tools. Um,
Yeah,
I've been through a lot of them. I've come to a point where the ones that work for me, if you find an edge, then it's part of, we're talking about building a trading plan. That's your edge, and that works for you, and you can find that, get it done.
get it done. Eating with Jay. We already deleted the comment once, but no, no fire drills. We don't do that anymore. Uh, No.
Fire drill was not getting caught on a short this morning.
Hopefully
That
the
was
information we're providing here and on Topstep TV throughout the day, through all of the coaching that we have, is preventing anyone from needing a fire drill, right? Ideally, we want traders uh, trading in accounts and sustaining those accounts. Let's talk about gold a little bit
one quick
here.
thing,
Yeah, go ahead, coach.
from Paul ACH, hit the like. Ah, love that. Hit the like. Tools, less is more, in my opinion. Yeah, I'd say 4, no more. Whatever works for you. But so there are tools, you know, a carpenter doesn't get his work done with 50 different tools. It's probably about 4. You could build a house.
Yep. N Slug says, if you blow up, make the consequences meaningful. Good point.
Uh,
It's a good point. If you feel the blow up, then it's going to be a little bit different. And for Ina, I'll just put a link in the chat for a book. Actually, that link is too long. Uh, Mastering the Mental Game of Trading, I think, is a
a
pretty
good
good one,
book.
but by Stephen Goldstein.
Yeah.
Um, and like Dakota says all the time, I think sometimes non-trading books are even better. Um, but let's look at gold here. We're back above that 200 moving average, kind of held as a support today. I was actually looking for a long in gold, and here it goes with just being focused. The long in gold was the right trade, right, and not the short in crude oil. But it is what it is. We have to live with the decisions that we make. Here is we're going to kind of ignore the overnight session, even though we did have somewhat of a rally, but we know that uh, even the metal markets are going to be affected by that CPI print as well. Here is the 3-minute range for gold. And let's attach a VWAP to that. Can anyone guess what this VWAP is going to look like before I put it on? What's up, coach? What's your guess?
Let's we let's let the audience answer that, but I can visualize it now. I'd say flat. uh,
Pretty flat. Never left the range. That
Either side. Oh
never
my
left
god.
either side. So when we kind of consolidated down here around this 2,700 level, major number, we already saw it on the 30-minute chart was right above that 200 moving average as well. This is why I was looking to take a long. But what I was waiting for was the market to accept back inside of this range for the potential to trade to the other side. I got to review why I didn't take this one. It's another trade I called out, and I don't want that to be the theme for my 2025. For me, when I call something, I have to take it going forward. Um, and if we look at when the market got back into this range and closed in this range, coach, you see this volume here?
Wow.
That's the candle that got back into that range. So this is what I'm looking for.
Time, what
Go
time
ahead.
was that?
This is 11:15 Eastern time, so 10:15, 10:15 Central.
You know what's interesting about that? Look at
What's that?
the range. You would think that that kind of volume buying, there would be some huge range.
Yep. But there
Uh,
was not. Just a ton of volume coming in here. I don't know if it's short covering or whatever it is. And Chauncey, you read my mind,
you read my
anchoring,
mind too. Yes.
anchoring
We've
to
been
that.
doing this too long.
Yeah. Look at the chat, Paul there as well. Please put a new VWAP there. You guys. So okay,
All
here.
right.
So here's the deal, right? So since everyone knows exactly what I think now, anytime you see something like this, just let me know. All right. But we talked about this, right? This is the trigger. We talked a couple weeks ago about a trigger, right? Looking for something to happen and then volume and price action that confirms that thing. To me, this is the perfect trigger long. The candle closed inside that range. I can buy anywhere in here with my stop being on the other side. And it doesn't even have to be that tight, right? But for me, if this trigger now breaks, then the move that I saw was a false move, right? So why am I pointing out this candle and not some of the others?
The volume.
The volume. There was no volume. This candle tried to trade into that range, no volume behind it. This candle closed inside the range, no volume behind it. It's not a trade, right? Where the market is trying to do something, but it's failing. At this point, the market tried to do something and there's actual volume behind that move. And that's why I trust this one a lot more. We talked about trade
And
times and
it
go
came
ahead,
at
coach.
an odd it came at an odd time, 10:15.
Somebody was talking.
Okay, well, talk is cheap. Talk is cheap. Margin costs money.
Right.
Oh,
Yeah, 100%. But this here is the trigger, right? So we talked before about how long are you in a trade, and trade hold times and things like that. For me, ideally, my best trade setups, I take a trade and the market is going in the direction that I want it to go fairly quickly. Could I have taken this trade at this level, an hour before this trigger? I could have. Uh, am I comfortable sitting through a 5 point drawdown, not knowing that the market is trying to at least trade through this range? I could have, but to me, I think is that necessary to do? Go ahead, coach.
coach, go move that screen to where you don't see to the right at that point. Now, in the present, what would it in that chart tells us this is a great buy. And there might be something. And I'm not putting that
Yeah.
you might have some, but the market at that point looks like what? It's about to fall off the face of the earth.
Yep.
Inflation's been squashed. Why do I own gold? Okay, let's go one at a time. The next one,
And we're seeing it in the chat, right? Everyone's saying, no, I would be selling this
yeah.
for
So
good
when
reason.
you look at yeah, when you review charts, do this. Don't just look at the out, like it's don't look just at the outcome and go, well, I could do this, this, and this. Here, this is real. I would not now that would just buying it blindly,
Yeah,
was it luck or was it uh something I could repeat?
correct.
Um Now if we put on moving averages on this chart, maybe we see something.
We do have so
Even
what we do have on the
just
30-minute. Yeah,
it still didn't look good.
right.
On a 30-minute, okay. Now we go to a different time frame, and this is important.
Yep.
You execute in your time frame and don't make a decision outside of it. You have to trade. If you enter on one time frame, don't leave on another time frame. That's your execution time frame. That has to remain consistent. You can get in for, like you just said, the 30-minute. Okay, now we're looking at the 30-minute.
Yep.
Now, we didn't see that on the 3-minute.
Right. So what I will say is I keep the 30-minute charts up on the side. My 3-minute chart is the execution chart. I did see this on the 30, but at the same time, we do see moving averages and VWAP and whatever it is break as well, right? So for me, seeing this says buy it, right? Like you say all the time, coach, right? We're above the 200 moving average, buy it. Uh, but that comment you made the other day, we could have the settlement of the market and still lose money on the day. When do I buy it? Right? We're day trading, timing and location. If this was a swing trade, put the trade on and I'll close that account and never look at it until it hits my profit target. But in a case where we're day trading, timing and location matters. And for me, that timing comes from that trigger and that volume. But go ahead, keep going, coach.
No, no, that's really good. So now, if we knew the the 200, maybe we make a play there, but you're still early, and
Yeah,
that's why I like it. This is what I've learned from Coach Jay is that volume. So if we go one at a time, what volume's going to lead this? Now that's the what I call the middle finger. It's like if you're short, you just that volume. And if you look at that volume, match it up, it doesn't look like just the candle alone. It's a decent size. It's a little bigger than average at that time, but
Right.
with that volume, you have new information. You had buying. Why is it buying? It's a blue. It went higher, and that is a key level right there. Something came in and changed it. Now, if you're looking at the 200 on the half hour, and now you have, I would, to me, it's much better right there. Now I have something to lean on.
Yep.
What's my risk? I say two ATRs.
And so Vipa says that's news volume though. And that's why I think it's really important to build a puzzle for your trades, right? What am I looking for? And a half an hour before this move happened, I said I want the market to close back in this range uh, for me to want to take a trade long. Now, that's my expectation. I don't get to choose how or why the market does it. If it's news that caused that, then it's news that caused it, right? But for some reason, that news caused the market to want to buy here, which validates my trade idea, and we can see it from that point. Whether it be news, whether it be a market close, whether it be somebody fat fingered 1,000 contract. Well, maybe not that one because they'll probably get out of that trade. But
Yeah. Okay. Wait, right there, coach. If someone fat fingered 1,000 contracts,
right,
you'd know it because it would break that low,
exactly, they get out of there.
and then you take the loss. No, remember, you have it's. It's not about winning or losing. Can you afford the risk? Is it an opportunity? Is
Mhm.
it repeatable? This one, you got information. That this
Yep.
is it's really important, especially with volume. You know, just buy it blind. Wow, someone bought this.
Yeah.
And that volume, is it that low? It's why we frame that out. If we just frame that out and we see if there's some urgency,
Which one?
the high volume,
This
the
one
one
here.
that the one, yeah, that one there, no, it goes to the one before. That's the high volume not that, the candle before it. Oh no,
Uh,
there it is.
yeah,
All
it's
right, yeah,
it's this
you're
one.
on right. So because that's big volume. That's almost as much as the selling volume. It's bigger actually.
Yep. Yeah.
I don't,
It
it's
yeah,
there's
it
like
was
two
it
chips.
was the biggest volume of the day,
Mm. Is
which
that now that's important
changes things.
volume?
So, Ibrahim asked a very important question. What was the reason you didn't take this trade? It's the conversation I'm gonna have with myself when I, journal this. Not today. I'm not gonna do it today.
Self.
Listen, self, you called out a trade, why
Oh,
didn't you do it?
here, and I will say to get this in, and I will give you a little defense. You were on TV at that time.
I was.
A little distracted. Were you focused just on gold?
No, I so I think I was actually still I think I actually just got stopped out of the crude oil trade, when I took this one.
Okay.
When I didn't take this one.
Okay. And that's part of it too.
Yep.
Um, now, and part of our it's review. I wish I'd have seen that too. I wasn't looking at gold, but it's the principles of this trade that were. This could have happened in soybeans. It could have happened in platinum.
Yep.
And as far as being a news candle, was that a Fed speaker?
I think so.
Okay, that's secondary news. I mean, I'm going to put the list of five. It's CPI, PPI,
Jerome
Fed
Powell.
announcement, Jerome Powell. Um, there might be another one. Right now, the flavor of the day for us was Unemployment Friday.
Yep.
On the floor, we used to, when I was in the bonds, it was called Unenjoyment Friday because you just, any error you made was times 500. It was not, it was not enjoyable. But going back to this is a setup. This is important. If you're just trading, if this happened in the Nasdaq, you damn well you want to take that trade. it's well worth, not because it's going to be a winner,
It,
but
it's just defined. It's defined by a playbook where I'm comfortable paying for that, not losing. I'm comfortable paying for that trade if it doesn't work out. And honestly, that would might be one I take twice if I get stopped out.
yeah, yeah, because you probably put it in a bad place.
Right, right. But yeah.
Oh, we're already done.
We're at time. I really wanted to go over this one because you know, Ibrahim, that question, you're not putting me on the spot. You know, anytime you guys ask questions, that's why we're here to answer them, and to keep us honest, right? We are still working on there, so there's no such thing as a, if level 10 is the highest, I don't think there's any such thing as a level 10 trader, right? There's always something to learn, and you're gonna see us go through our process of learning how to implement and execute our processes better as well. This is a clearly defined trade setup that I would coach someone else to take and wait for, and don't do anything else until you see something like this, right? So I have to ask myself that question, right? If that's the case, and I'm going to coach someone else to take it, why wouldn't I take it? Was I distracted? I'm looking for other opportunities. Was I not patient enough to wait for this? Because really, this could have been my one trade for the day and had a hell of a day. Uh, because these are also trades that I want to lean into when I have that much of a confirmation. So it's a great question to ask. I appreciate you asking it, and Coach, I appreciate you as always going through the process with us.
No, and I can't stop. Well, so I'm going to go back to that highest volume before that sell volume.
This one here, okay, yep,
Yeah, let's frame that out. Let's say we come there. And this looks like, all right. Sellers are absolutely in control.
yep,
So if we put a VWAP in that high volume selling candle on the low, near the lows of the day, and let's see what the result of that flow was. The volume never left.
nope. This is that exhaustion that we talk about. Look at where it happened. Happened at 2,700 at the
So
bottom of this move. Selling volume coming in, no follow through on it at all.
so you can sell that. At what point do you start realizing it's isn't working? You either take two ATR or it closes a stop above that high of that candle, but you limit your loss. Looking at it at that point there, without knowing that was the high volume, but what was the result of that high volume selling? There was no follow through
No follow
selling.
through.
They might have been the ones who bought. I mean, if that was an entity that was selling, they might have that could have been the short covering.
Bad sellers become buyers, right?
Right. You need bad selling to make a market go higher. Wow. This was
Yep.
fun today.
Yeah, this was a really good one. Wish I was talking about this at the end of a successful trade, but that is what it is. We will have more opportunities, and again, just have to execute on them. That is for all of you who, you know, develop a trade plan, and you trust it and you go through your back testing process. So part of doing this is, and part of the reason, like I think I did this same review before we ever started doing the show, Coach. And it's just that, hey, I know what I'm looking at. I know what I'm looking at, and it's not a back testing session, because I'm probably, after we're done here, done with this review, I'm not going to look at these charts anymore, right? Because at this point, I have a strategy down pat, and I know what I need to do to execute. But when you look at charts often enough, and they do exactly what, you know, you assume they were going to do, eventually, if you want to keep playing this game, you're going to click the button. So that is why we do this here. Uh, Thank you all for joining. Thank you, Coach, as always. Remember, tomorrow we have Coach Robert on. Coach Robert going to be on with us talking about his strategy. If you haven't, you know, seen Coach Robert before, he is our tech guy, our automation guy. He does a ton with automated trading. So if you have any of those questions for him, let us know. He also said he has a little bit of an announcement for us, and that's all he gave me. He didn't tell me exactly what. So I'm excited to hear it myself. So remember, we have Coach Robert on tomorrow. We have slow markets with Dakota tonight at 7:30 Central. Coach Hoop, Coach Vince, and Coach Ray. Coach Ray's class is actually canceled for today, but Coach Hoop and Coach Vince are doing classes in Discord after we are done here. Coach, you got anything before we go?
No, great session. Good job, Coach.
You
Oh,
too,
yeah.
Coach. Thank you as always for joining. Hit that like button if you haven't done so already before we leave. Trade well, manage your risk, and we will talk to you all tomorrow.